Welcome to NASDAQ Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at the market site in Times Square, we have Chris Dearborn. He's the Managing Director on NASDAQ's Market Intelligence Desk with our weekly wrap on the markets. Always my favorite hit of the week because I know the weekend is just around the corner. And Chris, stocks look like we're going to close lower for Friday, ending the week of October 14th, but we're still going to close higher for the week.
That is absolutely right. We're looking at, especially for the S&P 500, 2 consecutive weeks of gains. Depending on how today plays out, we're still going to end up within a stone throw of the all-time high made back in July. You know, that 3,000 level has been kind of elusive. We touched over it a few times during the week. It looks like we're going to close, unless something happens coming into the end of the day here today, below that level, but still positive for the week, which is what we're looking for.
All right, let's take a look at our first chart today. This is the Dixie, the U.S. dollar index. Has certainly been a big point of conversation this week in the midday notes because of everything that's happening with Brexit in the EU.
Absolutely. Brexit's been a big impact to the currency market. We talked about the pound earlier in the week and how that is potentially going to have a significant move depending on how the vote goes this weekend. The dollar, as inverse, is absolutely reacting the same way. We're down consecutively here. This is a 200-day moving average. We're probably up against longer-term support. And if the dollar is going to rally here, it's probably about rallying the back of a Brexit no vote. If the Brexit vote does go through, look for continued weakness within the dollar as the currency moves forward.
And that should be good.
That should be good for yes, absolutely good for us. All right. And then on an index correlation of it, we have the other chart,
which is the
emerging market ETF.
Yep, this is our second chart coming up.
Second chart of the day. There we go, which will be an inverse correlation. So emerging markets, again, is looking on the currency play here, is breaking out against 200-day moving average is a reversion trade. And what you're looking at here is if you think that the vote is going to happen and it's going to happen negatively, meaning not passing, the dollar should start to rally again, which would be bad for the U.S. against the pound. And then inversely, if it fails, the emerging markets could be very positive here. So you're looking at a reversion trade between the emerging markets and the U.S. dollar as a correlation. And the problem with that is you have to wait for the event this weekend. And unfortunately, we won't know what happens till Saturday night.
Yeah, but you know, the good thing is with the charting, at least you have some price points that you can be aware of.
It's an if-then statement.
Right, exactly.
Is what you're looking at here, and it's very clearly cut, right? You're bumping up against the 200-day moving average for the EEM, which is the emerging markets ETF. And with the dollar, you're bumping up against or finding support on the 200-day moving average for there. So one way or another, you're going to have a significant move. And it depends on what happens this weekend.
All right, and to wrap up here, trading week ahead, over 600 companies reporting next week, and the bulk on the NASDAQ 100. You have Microsoft, Amazon, Intel, all the heavyweights next week.
125 S&P 500 names. It's going to be a very busy week.
All right, Chris, thanks so much as always for joining us. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.